You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com, and co-hosts Alex the Viceroy Jacobson from Options Express, Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
Welcome back to the Option Block, everyone's favorite bi-weekly source for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as from the ever-expanding, ever-exciting Options Insider Radio Network. 13 different programs for you guys to choose from on said network, including educational programs, unusual activity programs, financial advisor programs, futures options programs, some futures programs coming to a radio dial near you, so stay tuned for that. And of course, you can find all of that content as well as our 300, coming close to 400 episodes of the Option Block available in a variety of outlets, including the mothership, theoptionsinsider.com, as well as on iTunes, Stitcher, Aha Mobile, and of course, our own mobile app available for iOS, Android, and the Fire OS. And while you're listening, streaming, building your playlists via the mobile app, you can, of course, send us questions via Twitter, Facebook, email, questions at theoptionsinsider.com, via the website comment system. No shortage of ways for you guys to get in touch with us. A lot of you like to use stock twits, too, so we, of course, encourage that. However you like to get in touch with us and make your questions, your comments, your insights known to us, as well as to your fellow listeners, we encourage you to do just that. And joining me on the old program today, starting off with the man beaming in from the great duchy of St. Charles, Illinois, none other than Mr. Uncle Mike Tusaw from RCM Wealth Advisors. Uncle Mike, welcome back to the program, sir.
The duchy, huh? So you're kind of like you're passing the duchy to me. What's that old song from the 80s to honor Sebastian? But great to be here, as always.
I don't know if we need any of those kind of references here on the show, sir. It's a family program, after all.
Understood.
All right. And also joining me on the old program today, beaming in from the Options Express by Charles Schwab HQ right here in scenic and central and snowy today, Chicago. None other than the Viceroy himself, Mr. Alex Jacobson. Alex, welcome back to the program, sir.
Good to be here, Mark, on this, as you've mentioned, brisk day in sunny Chicago.
Yeah, I'm not sure if I'm ready for this amount of snowfall so early in the season. You know, one of the nice things about Chicago, people always said, oh, it's so cold there. But we never really got much snow. That changed last winter. Hopefully it won't be changing again this winter. We'll see. Fingers crossed. So far, it's not looking too good. We actually had some snow on Halloween, which was the first time ever here since they've been keeping records in Chicago. So that doesn't bode well for our snowfall this winter. Of course, Uncle Mike's probably secretly very happy because he has about 17 snowmobiles out there, and he's itching to get them going on the old trails.
Nothing secret about it. I'm happy.
All right. And last but not least, you know him, you love him as the Rock Lobster, Mr. Andrew Giovinazzi from a place called The Pit. And when he's not scraping off barnacles and fishing for lobsters, all of which probably getting out of season this time of year, maybe he does a little cross-country skiing. What do you guys do up there in the winter over there in scenic and sunny Maine?
Well, there's ice skating, there's pond skating, and there's cross-country skiing. We got tons of ski resorts. So one only 40 minutes from the house. So I wouldn't call it a resort. I call it a hill with a chairlift, but it's good for the kids, And in the meantime, everybody's, you try to get your dock out of the water before the ice crushes it.
So you're into all the winter sports then as well, not just the summer stuff for you.
Yes, I've been having a conversation with my sister on Facebook about it. We just follow the water. When it's frozen, we skate on it or do something on it. And then when it's wet, the beach is right here, which is pretty nice. And we, surf and body surf and whatever, the same stuff I did when I lived in California. I know, it's weird. But there again, you've got it all in Maine.
There you go. See, good to see that you're embracing the natural splendor of the countryside around you. It'd be a shame if you moved all the way to Maine and didn't really embrace all that stuff. It kind of would be a shame. So glad to hear you're having fun out there. And we're going to have some fun right now, listeners, because it's time to dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, and welcome to the Trading Block. This is indeed the portion of the program where we break down what was moving, what was shaking, what was lighting up the old tape today. And it was a bit of an interesting one. We saw the S&Ps kind of selling off a little bit, not a ton, but a little bit earlier in the session on the weight of the news coming out of Japan today. Of course, I should mention, all of you guys give me a hard time. We are recording today, Monday, November 17th. You're listening probably on the 18th or any time after that. We encourage you to listen at all times. Of course, today's impact in the markets primarily coming from the surprise, quote-unquote, announcement of Japan perhaps hitting a recession today or hitting recessionary levels. That, of course, never good for the global economy. Surprisingly, though, the market seemed to shrug that off. It didn't really take that big of a hit to begin with, and by the end of the day, the S&P closed literally unched on the day, so whatever weight that did bring to the markets pretty much got shrugged off by the ever-powerful, ever-unstoppable bull out there. The Q's, the only major index really selling off, and that was only about half a percentage point or so. And the Dow also unched on the day. So pretty much most of the major indices really shrugging off the news of this broad economic malaise out there in Japan. VIX cash also ticking up on the day, up nearly a point, about 3/4 of a point to 14.05 on the day. Yet another day when the markets are unched, at least, not rallying, but unched, and VIX cash getting a little steam back in after this here weekend. So perhaps, Alex, since macro news are top of mind today, we will start with you. What indeed caught your eye and your mind share over there at OX today?
Well, as you said, the averages didn't move much, but it was a merger Monday, so we saw a lot of activity in the two groups that were touched by mergers today. So we saw some run-up and some activity in the drugs and the biotechs. A couple of names had really big pops in their day. A little bit of a sell-off later in the afternoon. One name that's big here, I know this is a name that's been on CNBC like every second day, Celdex, was up almost 5 points today, almost a 35% pop. But, as we've said, not a lot of activity in the indexes, but a lot of stuff going on. A lot of 5, 6, 7 point moves today in a lot of the momentum stuff. Amazon, which had run up, they took about 5 points out of it today. GoPro up another $3 today, although it came in a little bit near the end of the day. So today was stock pickers day, not so much an index day here at OX.
Speaking of stock pickers, Uncle Mike, it wasn't exactly a banner day for your primary holdings, primarily that fruit company, but of course the old gold shiny ETF also taking it a bit on the chin today. So what was your take on the day that was and on the essentially the fact that Japan didn't really move us too much at the end of the day.
Yeah, looking at today, I mean, I'm going to have to take out a second loan to invest in more toothpicks to keep my eyelids open from just watching the markets throughout the day. Sometimes when you have days like this, that it doesn't really tell the whole story, and sometimes it can be way up and way down throughout the day. But today, it really didn't have a lot of action to the market in general. Just in looking at the holdings with which I have, Apple really did not move much. It's down 19 cents on the day. Gold, it did take it on the chin a little bit today, but keep in mind we're coming off of a 3% uptick on Friday. And the other thing with which I'm continuing to look at, and I hate to say it, I'm adding to the position, but I kind of am in very small increments, is silver. Silver had a 5% uptick on Friday, but today it pulled back a little bit. It's down 13 cents, down to 15.50. So we really did not have a lot of movement from everything with which I look at today. One thing that did catch my eye a little bit, and this might have something to do with the news from the Japan recession, FXI, the China ETF, that one's actually down just about 3% on the day to 39.25. But and I don't have any, none of my clients have any, we have, I think, maybe less than 0.1% of our overall holdings are FXI. We typically have more, but for now we haven't been lately. But for the time being, or for looking at today, not a lot happened.
All right, and last but certainly not least, Mr. Rock Lobster, when you weren't busy eyeing the lakes and waiting for them to freeze, what else caught your eye out there in the scenic, tropical winter wonderland known as Maine?
I've got a number for you, and I'm going to let you guess. 4.3. What would that be?
That would be the collective IQ of the option pit team.
Way too high. Way
I was
high.
over by about a factor of 2 on that, I would say. Now I'm gonna say that sounds like probably realized vol of the S&P about a month ago before we got in, or maybe a month and a half ago before we got into all the craziness of October.
And you would be close, except a month off. That is the realized volatility for the last 10 days.
Oh, well, there you go.
The S&P 500.
There you go.
4.3.
I know we were back
4%.
we were in the 5 range for a while there, and then it got to 6, and that was crazy. Then it got up to 20, and we were talking some serious action, and now it's come back off.
It is nothing. They have taken all the realized volatility, and they have made it go away. And normally when realized vol gets this low, and this is when I'd like to have Don the Lion back here to talk about realized volatility, because he, like me, I'm definitely a realized volatility follower. I think I don't know how predictive it is about the market's going to do, but it just, realized vol does not stay low forever, as it does not stay high forever. And when we're looking at low levels of the year, I can't help but think every time it touches down this level, we generally have a pretty good uptick in volatility afterward. So I just, in my head, I think, well, this is getting to be a little, literally the market has just almost a straight line sideways for the last 10, 12, 13 days. And it's good for stockholders. And I think overall I'm a little, let's just say I'm a little less bullish than I used to be, and mostly because I think the Bank of Japan, with all their shenanigans, monetary shenanigans, I think they're starting to lay the seeds of some problems, because, there was that thought where, we had QE in the U.S. and everybody thought it seemed to have been working, but there were some structural changes, like with the U.S. deficit and things like that, where they actually took real government spending down, and the U.S. economy being, fairly, it is what it is in terms of it adjusts fast. We kept growing, and then kind of QE, I sort of was balancing the sort of, let's call it, structural pull down from the other side. Now that QE is done, who knows what they're going to do with the deficit, but in Japan, I don't think you really had that sort of that shift on the other side. No, there hasn't been anything to offset, like government spending reductions and things like that. So they just keep trying to pump the press, and and they've had their sort of foot on the gas pedal, and they're still kind of going into this recession, and nothing's really stopping it. So at some point, that's going to start either to freak people out on the monetary thing and, versus some sort of, fiscal fixing, so to speak, of government spending. So I think the Europeans are just starting to realize they can't borrow their way out of it. I think that's where they are, which is why they've basically stopped free falling, but they're going to sort of slowly come back. But Japan still hasn't quite broken that cycle yet. So we'll see. I think the U.S. market still looks, I think the economy is still relatively robust, but, realize vol's hitting a super low level. And normally that's because everybody's like, oh, everything's okay. But it's really just more like they don't have a reason to sell or move. And it won't take much from this level for people to have a reason to move, quote unquote. So we'll see how that plays out before the end of the year. And the move actually could very well be, where are we, 2041? Why not be up another 30 or 40 handles by Christmas? It could easily happen, but I just don't think we don't move for the rest of the year. Something's gonna move us here relatively soon.
Yeah, it seems like that holiday malaise setting in a little bit early. Perhaps people getting a little bit over optimistic that nothing could shake us of this. I mean, today's news probably maybe a good reinforcement of that for them. It didn't really shake the markets too much at all. So we are still holding in that very, very low actual volatility for today paradigm. We'll see if that maintains or if something can come along to shake us loose. Of course, oil continuing to move, continuing to have a lot of impacts on the broad market there. Perhaps we'll get into that a little bit in the Xpress Block as well. But I think for now, we'll keep on rolling right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, and that funky tune means it's time once again for the Odd Block, the portion of the show where we break down the weird, the wild, the woolly, the wondrous paper that is lighting up our collective tape and is catching our eye and triggering our scanners over there at theoptionsinsider.com. A lot of fun stuff to highlight today, including a name a few of you may be familiar with, my old stomping grounds. I believed Andrew dallied in that pit as well. I believe Sebastian definitely did. So stomping ground for a lot of people these days over there in the SIBO. That was the big SPX pit. It was the mothership, the flagship for quite a while. Certainly is now alongside VIX. Not many equity pits really left standing over there on the floor anymore. And we saw some interesting stuff cooking in SPX land. As you mentioned at the top of the show, S&P's essentially unched on the day. They're up about a handle or so to 2041 on the day. So the name that, of course, does some decent paper, does close to 1 million contracts a day of late. This is a big beast of a contract. Doing a little bit less than that today, doing about 650,000 contracts today. All right, and what we saw out here in SPX today was a little bit longer term paper actually out here in the Feb expiration cycle. In particular, what caught our eye was a bit of a risk reversal. In particular, it was the February 2015, of course, started off catching our eye on the 1860 strike. In particular, the 1860 puts going up, and then on the flip side, we saw the 21.5 calls. Those are the 2150 calls going up. When we profiled them this morning, essentially 2 mega blocks for a total of 44,577 contracts. Again, this is kind of our traditional bullish risk reversal, sell and put, buy and call. Someone really looking to leg into some size upside here in the old S&P. This has Tusaw written all over it. This is another diehard bull looking to say, hey, we're rally ho mode right now by February, certainly. And if it drops down to some decent levels, 1860 on the downside to be precise, this guy doesn't mind picking up a few S&P contracts along the way there. All right, Mr. Rock Lobster, let's kick things off here in the old Odd Block. What do you say about this fairly sizable risk reversal going up out here in the S?
Yeah. Well, 44,000. Can you imagine trading a 44,000 lot?
I can imagine the pit lighten up to a degree, and everyone perhaps getting their fill on that one. Of course, these days it's a different beast. That shows up shopped to death, So how many the pit actually got? Who knows? Half of that, maybe. The rest got picked off before it even got there.
The pricing looked like dead in the middle. Like, you've got a massive trade, and it goes up somewhere in the middle.
That's actually impressive. It's impressive on the behalf of the broker. Well done.
Yeah, it's like, okay. The only thing so is the guy buying? Well, there's two sides to every story. So obviously it's matched, but if you're a customer, let's if you take it from like the Tucson school, do you create a collar where you sell the 2150 call and then you buy the 1850 to protect? That's, more than 10% out of the money. I mean, you could. I mean, it is protection, but I don't think it really is going to give you a great deal of protection that far out of the money. Which is why we're looking at this thinking it makes a lot more sense for someone selling the puts, using the skew is relatively spread out right now, selling the puts, buying the upside call, taking in a credit. If we get no rally in the market, they're going to keep a pretty good chunk of credit on the trade. And if we actually do get a rally, then it could make some real money. If we just sit here and do nothing, then they're just going to keep the put premium. So I just, as a hedge for, let's say, a long, if they created a basket of SPX and then they added this against it, I don't know how great of a long this really gets you. From a delta point of view, it's only about 30 deltas a contract or something like that. So it's actually 25 deltas only. So I don't think it gets you a whole lot of a short delta protection. And in the SPX, obviously they're either buying futures or they have to create some sort of basket against it. Yeah. If they're long for maybe 650 or what was the low? 666 in 2009. But I don't know. It doesn't make a whole lot of sense for me to pay for this in this fashion. Anyway, that's why I thought this makes much more sense as a good old risk reversal selling put and call.
Yeah, if he paid for this, that would be surprising. This definitely looks like. I would think he wrote this. I neglected to mention the level here, listeners. He put it up for a 940 credit if he did indeed sell put and buy call. That is, if nothing else, exemplary of the state of the skew out there in the SPX. He's writing a put that is over 200 handles out of the money, buying a call that is 100 handles roughly out of the money, so much closer to the money called than put, and he's still collecting $9.40 to do it. So clearly you can see where the premium is these days, and it usually is out here in the S. Uncle Mike, as our representative diehard bull here on the panel, what do you think about these levels? Would you think about legging into a risk reversal at those levels, or does that speak to you at all? Or perhaps was this you? I know it's a little bit small size, but was this perhaps the RCM guys at the end of the day?
Yeah, I put this in my small spec account. No, what I actually think this is okay if this is the only trade you have. So let's say, for example, you're bullish on the S&P, and you're thinking about buying the equivalent amount of futures contracts to add up to these deltas. And so, granted, that's a lot of contracts on it, but let's say that you do have a longer term time horizon, and you want to collect a little bit of premium on it. Trades like this are what premium sellers can do when they don't want to limit upside, and that's the benefit of doing something along these lines. So I like it if it's someone who is definitely a diehard bull. Now, the advantage of this, let's say that it does go down. What's your exit plan? The trader here is thinking something along the lines of what I would think, if this were me, I would think that as a means of risk management, let's say it does start going down to say the 2000 level, then 1950, and then 1925. You have opportunities to roll those puts down as a means of protection. And the fact that you got a credit going into this trade, then that's something with which you kind of have some money to play with in case it does start to go against you with the rolls with which you're trying to do. the other way, let's say it goes your way right away, then you have the 940 credit, or let's assume that he has the 940 credit, then you may have an opportunity. Let's say that the S&P does go up 100 points over the course of the next month. You may have an opportunity to get out of these 1860 puts for a debit of around that price. And if you just set your limit in there at $9.40, you'll never get that price. That's just Murphy's Law. But if you want to get out of those puts for paying a little bit of a debit, then you have that ability. And then all of a sudden, you have 8 bajillion call options on the SPX at a fraction of the cost, or possibly even a credit, and you have no downside risk. And that is the dictionary definition of playing on the house's money. So if you're doing something like that, I don't like that trade. I love it. But it just depends on what the underlyings are, if he's trying to hedge something or something along those lines.
Indeed, sir. Well said. Yeah, we love this. We love bullish risk reversals as a whole here on the show. It's a great way to get long or approximately long the underlying without a heck of a lot of outlay, or in this case, actually collecting a credit. So there certainly are worse ways to do it if you wanted to go about having that exposure in the S. So we'll keep an eye on this one. That is, of course, a pretty sizable one to watch. Meanwhile, we're going to roll on into perhaps a more topical name for today's activity. This is the iShares MSCI Japan ETF, ticker symbol EWJ, closing today about $11.58, down about 20 cents on the day. This is the name that, surprisingly, actually, of late has been doing 20,000 contracts a day, and even more surprisingly, did less than that today, did not even 15,000 today. You think today would be a banner day from an overall volume perspective for good old EWJ. And the interesting thing that caught our eye out here, a little bit closer to home this time, this was in the NOVE expiration cycle, in particular the NOVE 11 puts, going up pretty much in one mega block this morning for just a tick under 6,000 contracts, 5,983 to be precise. Looks like paper buying all of that for a whopping 3 cents on open interest of a little over 12,000 contracts on that strike. So this has all the hallmarks of perhaps someone who was banking on perhaps a little bit of stability out here in Japan, blasting out a ton of puts. And he decided perhaps today's news maybe spooked him a little bit, and he decided, hey, I'm playing with fire, being short so much here on the 11 strike. It's getting a little bit close to the money. Let's perhaps take these off the table. I don't mind paying 3 cents to do it. That at least appears to be what it was like on the surface. We didn't see any underlying going up with this total of 12,000, like I said, open on the strike. So this guy could have a lot more to go here if that is indeed the case. We'll pay attention to this, but in the meantime, Mr. Rock Lobster, do you concur with that? Do you think this is an early close here of someone who blasted out a ton of NOVE 11 puts?
I think so. I mean, don't you feel that if you're short these, and for the most part, if he's buying them back for 3 cents, they've made money on them. But you're down 1.5% today. You could easily be down 2 or 3% tomorrow, right? And all of a sudden, you have a problem with these things. Although the EWJ is kind of a piggy of a product, but it does move. But 5% and you're there, right? On about a little less than 50-cent move. So, but I think the way that the Japan equity market is moving, I would not put it by anybody to want to close those things. And clearly, when you think about it, their the liquidity providers are not letting those puts go. You think, they're offered 4 cents, but on a relative value basis, that's pretty high for an out of the money put like that. And somebody just paid 3 cents to close them. So there could be a little bit of nervousness here. We'll see how that all goes overnight. But if I was short them and I had made money, I would just be closing them. I have pupils in my class that make fun of me for that all the time. Why do you always bother closing them? It costs commissions and stuff like that. And I go, well, that's just what I'm going to do. I'll either close them or take the stock, but that's what I'm going to do. And because I can live with it. I don't like a position that you could have closed for 3 cents that goes to $4. That bugs me. Or even 50 cents.
I think that's the old market maker in you, and we had that beaten into us at an early age. Close out everything, even close to the strike, was kind of just a process you go through every month at the time, now every week. So yeah, that kind of is, I think, the old school mentality for a lot of us. I used to annoy a lot of brokers in my day. Can I close out this 3 lot? They would hate me, but I would do it. So yeah, it certainly is something that is, I think, ingrained in part of the mentality, to say the least. And let's move on. This last one, kind of coming out of left field, but an interesting one nonetheless. This is not a Japan name or not a broad index name, but instead everyone's favorite. And it kind of keeps with the tone of the other big product that continues to move and shake the markets. That is, of course, crude. This name, not one we talked about here on the show before. This is Buckeye Partners LP, ticker symbol BPL, closing today about $80 and some change, up about 1% on the day. And this is the name that does really not much paper at all, about 362 contracts a day in any given session, doing about 1,500 today. And the lion's share of that, about 1,000, coming in one call overwrite that doesn't look like it went exactly this guy's way. We saw 1,000 lots of the D80 calls going up this morning. Looks like paper selling in one big block for $1.70. Of course, the underlying rally today, and looks like someone decided to bid these things out. When we profiled them this morning, they were bid in his face. They were at bid $1.90. As the day closed, they went out 210 at 235. So this guy, probably not the happiest of campers that his overwrite didn't go his way. Never a fun feeling to say, oh, how are they now? And they're bid in your face. Of course, about 750 open on this strike. So this guy could be perhaps piling in to an existing position, or if he is closing out an existing long, either way, he's not excited because he could have got a better level if he just waited a little bit. Mr. Rock Lobster, take us home here on this guy's perhaps inopportune call sale here in Buckeye Partners.
Yes, it had all the fond memories for me of a spite bid.
How are they now?
Somebody trades them for 170 and you're mad you didn't get them, so you throw a 190 bid up there right after they trade. I did that as a very young market maker, and the broker almost snapped my neck off.
Yeah, so you were obnoxious is what you were saying.
I was hugely obnoxious.
Like me closing out my 3 lots.
Exactly. It was pretty obnoxious. However, not totally clear that this was a sale. Again, another large trade right in the middle of the market on a relatively illiquid issue, so paper that was most likely matched. And, this is one of the few names, energy names, that is still holding, a higher level. So, it pays a big dividend. The name isn't in, at least through this, the D cycle, there isn't a problem with, there are no dividend issues because it's not till February, but, somebody's looking for a little bit of extra yield through December. That's what it looks like. And then, of course, there obviously was a difference of opinion on how cheap these calls were. So, and then they went bid immediately in their face, and the stock just started kind of going up. So, I'm not quite sure how it all went down, but it feels like an overrider, a buy rider that just didn't get the best price they could have at the time. But again, an interesting sale nonetheless. But that's how I see that played out there.
All right, well done, sir, and that is going to do it here for the old odd block. And now Alex is waiting with bated breath on deck. So let's dive right on into the Express Block.
The Express Block, brought to you by Options Express by Charles Schwab. Options Express by Charles Schwab lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express by Charles Schwab is the online broker for all traders. Best of all, Options Express by Charles Schwab lets you trade stocks, options, and futures all in a single account on powerful yet easy-use trading platforms, including mobile devices. Visit optionsexpress.com for your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome to the Express Block. This is indeed the portion of the program where we break down the crazy stuff going on over there in the world, or sometimes the more sane, certainly less crazy than what we just talked about in the old odd block. This is indeed the portion of the show where the Viceroy puts on his fanciest of fancy caps and takes us behind the scenes, behind the velvet rope, if you will, into the land known as Options Express by Charles Schwab. Alex, I'm sure a variety of different things were crossing your table today. Maybe some of the Japan-related trades. I'd probably imagine a lot of the crude trades were continuing to light things up over there at OX today. Was that the case?
Yeah, energy and all versions of it, everything from the drillers with the Halliburton Baker deal continue to be active here today. Biotechs were active here today too, and another old OX name that had sort of become dormant for a while, Lululemon, has had a little spark here in the last couple weeks. But, you know, as I said earlier, the averages didn't really reflect what was going on today. Today was stock pickers day, and a lot of individual names saw activity today. A lot of stuff traded through significant strikes. One of the biotechs that's popular peer, Regeneron, traded above 400 today, even though it settled back below it. But that always triggers sort of a flurry of activity, and I think some of it is the overwriters rolling, but that's a lot of what was going on today. I'm going to use some of the Xpress Block, though, to brag for a little bit. OX by Schwab today was named one of the 100 top places to work by the Chicago Tribune, so we're very, very proud of that. It's a couple years running that we've earned the designation as top 100 places, in the top 100 places to work by the Tribune. And then talk about a couple resources here. Every last Xpress Block we've talked about 3 and 4 leg coming to the Schwab side to Street Smart Edge. Talked about premium harvesting coming to Schwab Mobile. Very, very excited about that. At 2 o'clock today, I went on to our tools site and looked at the Idea Hub here at OX. And at 2 o'clock today, Idea Hub was kicking out 555 ideas. Now, that's everything from premium harvesting ideas, earnings ideas, quantitative covered rights, to unusual activity. So if you're a new OX customer or now a Schwab customer, come look at some of the resources that both OX and Schwab have made available to you.
Good stuff there, Alex, and congratulations to you and all the team about getting mentioned in that very prestigious list. I saw a few other names popping up in my inbox today saying they made that list, so well done there, sir. I'm sure you can speak for it. They employ you, so they must be good, right?
There'll be donuts tomorrow. That's the important
there we
metric.
Go. Now we're hitting the really, really salient details here.
and now I get the phone calls from the Schwab guys.
It's nothing if we can't at least make your day a little bit more complicated from a compliance perspective, Alex. Then we've done our job, certainly. But now it's time, listeners, for us to keep on rolling right on into that other portion of the show, sans hats, but perhaps with some bubble pipes and some smoking jackets. It's just time for the strategy block.
It's time to dispense options wit, wisdom, and education. It's time for the strategy block.
All right, listeners, and it's time now to dive into that realm of strategy. Uncle Mike has donned his aforementioned garb and grabbed those stone tablets and is ready, perhaps even willing, to dispense some options wit and or wisdom. Uncle Mike, are you ready? Are you indeed willing? And what are we getting today, wit or wisdom?
Oh, a little bit of both and a little bit of a story to go along with it. It's funny you mentioned my bubbled pipe at times. Yesterday I was at a birthday party with my 5-year-old daughter, and we went to one of those places where you spend $1 million on the video games and you get maybe $10 worth of prizes, so to speak. Great deal, unless you really can get the tickets in the right way. It's probably not the most economical, but the kids had fun, so what the heck. But there is a bubble pipe in my home now from my daughter, so I'll have to talk with her about actually using the bubble pipe just for the purpose of this show.
There you go. You need the visual just to complete the image, complete the ensemble.
That's what I'm thinking. Yeah, get the bubble pipe out. So, but anyway, I want to talk today about the importance of doing stuff, but I also want to talk today about the importance of not doing stuff when you shouldn't be doing stuff and you should just be sitting there. My opinion, anyway. Now, an example of doing stuff. Let's say that you are in a long stock, long put, and the stock, and you have just, for an oversimplified example, you have an at-the-money put option that you're long. If that's the case, let's say the stock just all of a sudden has a 10% drop one day, 1 week, 1 month, whatever the case may be, and you have a massive profit on that long put. Well, in that situation, my opinion is that if you're still bullish on the stock, what you ought to do is roll down that long put option and continue to stay in the stock. Now, let's talk about not doing stuff. That's kind of an obvious one with which we talk about on the show all the time, in terms of rolling down protective puts if you're still bullish on the underlying. But what I want to go through right now is the importance of staying patient when not doing stuff. I want to tell you a story. Back in 2008, it was January 1st, the first day of trading in 2008. And so I was working for Options Express at the time, and this is back when I was still doing stuff with my own personal money before I was taking it to the masses as I do today. And so the section of my portfolio with which I was doing the simulated index concept, I bought all my bond positions that first day. And so it was a down day in the market that day, and I was kind of in a situation where I was flat going into the year because I had already exited some other positions because I don't know, maybe I was on vacation, I forget why, but either way I was flat going into the year for that specific account. And then got into the bond positions the first day of trading, and we had a down day in the market that day. So what I decided was, you know what? I'm just going to wait until we're actually positive on the year in the stock market until I start buying some long call options. And the reason is that I just want to be a little bit protective. And so we were pretty high in terms of the all-time levels of the S&P at that stage of history. So I figured if I wait till tomorrow and we're up on the year and I miss out on 5 points because we had a big up day the next day, I can live with that. What the heck? But for those of you that would be looking at a chart of the S&P 500 for 2008 of that year, you'll notice that we never went up that whole year. We actually went down. We went down a lot. Now, don't get me wrong. This was not my only portfolio. I had other things with which I did lose money on, but this was the biggest account with which I had. And so with that being said, I remember I made that rule for myself, and I have a much more stringent set of rules at this stage of life, but that was just a rule with which I made for myself that day, and I stuck to it throughout the whole year. I did not have any long calls on SPY that entire year, and so obviously it worked out for the better because everybody knows what happened in 2008, but that's an example of sticking to your rules. I've always been the perma-bull with which I am now, even back then, probably even more of a perma-bull back then. And it was so hard for me to not want to just buy every call I could possibly get my hands on when the S&P dropped 10%, 20%, 30%, and then even over 40% on that year. And so at those levels, it was a very difficult thing to do. But there are times with which you need to just not do stuff. And that's something with which I can't emphasize enough, and I want to just tell that story because of the fact that if you have to be in cash for extended periods of time, doing stuff just for the purpose of doing stuff is foolish. However, if you're doing stuff because there's a reason to do stuff, then it's a wonderful thing. In 2008, that's no market for a perma-bull such as me. And me being the perma-bull with which I was and still am to this day, that's a time with which I don't do stuff. So, message for today, yes, there's a time to do stuff, but there's also a time to not do stuff.
Well said, sir. I couldn't have put it better myself, or perhaps I could have, but let's just put it this way. I didn't today, so it's all on your shoulders. Very, very capable, very well done. And now we're going to keep on rolling right on into Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, and welcome to Around the Block. This is indeed the portion of the program where we break down what we're watching for the rest of the week. Perhaps we'll start with you, Mr. Macro. Alex, in addition to all of the events and unease going on over there in Japan, what is catching your eye? What are you watching for the rest of this week, sir?
Well, I think the unease in Japan is de facto what we're all watching. I'm looking at FX. I'm looking at both the yen and the euro. I'm looking at the macro rates. The Japanese 10-year trading under 0.5% in terms of yield. The German trading right about 0.75%. To Andrew's point earlier, they can try to stimulate these, but there doesn't seem to be a lot they're going to be able to do for their economies. And we're watching oil to see if it holds the $75 range. I'm a little surprised about the bump in VIX today. I thought VIX would have come in a little bit or would have been flat. VIX moved about 5% today, so that tells you there's still a lot of concern in the market, and that's what we're watching.
All right, and Uncle Mike, what are you watching for the rest of this week, sir?
Well, just watching to see if something happens, quite honestly. With oil doing what it's doing, I'm definitely watching the price of oil. We'll see if if OPEC does actually hold the 70 level, like what we talked about last week a little bit. And then also just want to see FXI is probably the main thing on my radar right now in terms of a potential opportunity as to something that might happen, along with the semi-shiny metal silver.
All right, and Mr. Rock Lobster, what are you watching for the rest of this week, sir?
One is, yes, I find don't find it super curious, but we've had volatility's been up for like 4 or 5 straight days, even though the market's kind of going sideways. So there's a little bit of worry. Definitely, when you don't see vol drop, where are the premium sellers? They're not there. So the premium sellers overall are just, they're not there. I always like to see, as a market maker, you like to see that people selling premium at the end of the day. Like, they sell it today because they don't think they can get a better price for it tomorrow. Not quite seeing that in like the big index products right now. So, I think there could be another shoe to drop. Who knows? Like Alex said, OPEC said 70 for oil. To me, that just feels like a big target still. We will defend at 70. Well, then the market tends to get there, although it's been kind of getting there in fits and starts, but certainly not rallying back to $90 anytime soon, it feels like. And seeing how we kind of roll into this. So I think there is Japan, there is the Ukraine, which nobody seems to care about, but in March or April, that was enough to tank the market pretty good. So, I think there's the outlook in the U.S. looks good, but as usual, probably all through history, things outside of our shores are still there to give one pause. And that's kind of that's all we're really looking at so far for this week.
Spoken like the diehard isolationist that I know you are, sir.
Yes.
You can't live in Maine without a bit of isolationist streak to you.
That's sort of, it just happens in the wintertime. You just become isolationists.
The hell with all them foreigners.
Because you can't get out of your igloo.
All right, that's going to do it for the Round the Block segment. It's also going to do it for this episode of the Option Block. But before we go, as always, let me check in with each of my cohorts here on the old All-Star panel, see what they have coming down the pike that may interest you. Starting off with you, Mr. Rock Lobster. What's coming down the pike in the land of the pit?
We have the Option Pit Bootcamp coming the second week of December, taught by Mr. Sebastian and myself. It'll be December 10th and 11th and 13th. So if you want to, like the Idea Hub, all the stuff that generates the ideas, if you want to understand how all that stuff works, where the ideas come from, understanding volatility, standard deviation, Greeks, all that stuff, that's where I think a big part of where all of that stuff comes from, kind of looking at options in a mathematical way on how the values get there and what makes them either good purchases or sales at any given time. So, but we also take that and look at selling puts, buying calls, everything, and everything in between. So the idea is to help you be a little bit more condition sensitive when a trade might be a good trade or a bad trade, and I think that helps. You can take that and you apply it to how you look at just about everything else. It could be portfolio management, it could be managing spreads, it could be managing a short put or whatever have you. So I think it's a great deal. It's a lot of education for not a lot of money. And Mark and I are kind of on our website trading and putting things on every day in one form or another. So it's just, it's an opportunity. At least, I don't know if you want to get inside our head, but this is where a lot of our ideas come from, based on this kind of methodology using volatility.
Inside your head may be a scary place, but if someone out there wants to go there, this is indeed the best portal for that. So by all means, surf on over to optionpit.com and you can get a glimpse inside the scary place that is Mark Sebastian's and or Andrew's heads. All right, and next up, Mr. Viceroy, what's coming down the pike in the land of Options Express by Charles Schwab?
So 2 live events this Saturday. Jimmy and the crew will be in Houston, Texas. That's Saturday the 22nd. Then December 13th, a Saturday, Jimmy and the crew will be in Boca Raton, Florida. A couple webinars I'll showcase. This Wednesday, the 19th, Mike Zaremski, who manages our futures desk, is going to do an overview for trading futures. Also on the 19th, Nina's going to do the trading platform and site tour for new customers, maybe customers who want a refresher of what's available. Then Thursday, the 20th, Nina's going to do advanced order features, and she's going to go over the walk limit. All the events at Options Express, live events, webinars, are all free. Just go to optionsexpress.com, click on the Educate tab, and the events are ahead of the login, so you don't need an account to attend an event.
All right, and last but not least, Uncle Mike, what's coming down the pike in the land of RCM Wealth Advisors?
Once again, we have the December event coming up in Miami, so for more info on that, go to rcmfutures.com. And then also, Thanksgiving is coming, folks. So it is getting close to the end of your time to chat before you get fat for the promotions that we have running. Give me a call. Would love to talk with you about doing stuff in terms of options with your portfolio. If you have as little to invest as $500 a month, 312-212-3531, or send me an email at mtusa@rcmam.com.
All right, and that's going to do it for the old option block. On behalf of Uncle Mike and the Viceroy and the Rock Lobster, and of course myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show. Quick little plug. I know a lot of you out there aren't just active retail traders. There are more than a few of you floating around in the industry. If you're going to be in Chicago on December 8th, our Options Alliance, a group that is our industry nonprofit association for targeted financial, let's shall we say, entrepreneurs, people doing a lot of interesting startups and new ventures in this space, in this industry. We're having our next big conference on December 8th. That is here in Chicago, the Arditi Center for Risk Management at DePaul downtown. You can learn more at optionsalliance.org. Check it out. That interests you. It's a very unique event. No one else really diving into this kind of material. You want to make sure we have something very fun and unique to offer for you guys. Check it out, optionsalliance.org, to learn more. And we'll see you next time right here on the Option Block.
The Option Block was brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.